Hello, traders. It's E from MarketWizards.com around noon on Sunday, the 13th of November, 2022. Reminding traders to use risk capital you can afford to lose. All right, it's Sunday morning and had my coffee, made breakfast for my wife, as I like to do on Sunday. She takes care of me the rest of the week, so it's the least I can do for her. We've taken our walk already, get lunch pretty soon, and then go to the pool for a bit. But I thought we'd take a couple of minutes here and take a look at the E-mini S&P. Did a video yesterday on the NQ, and now let's take a look at that and see how we're doing. Probably best to start with the macro look. Had a interaction with David Hunter, brilliant macro analyst, and taking a look at what I had seen, and I like objective criteria. I love, listening to smart people like him, and I always want to be the dumbest guy in a room, and oftentimes I have no problem being that. But I certainly want to do my own homework too. And the analysis that I had done a few weeks ago really showed me that the travel range from high to low, we came back into that 50% area in a pullback 34.91. And these get adjusted, obviously, based on futures contracts that migrate and will change, but I try to use the print highs and lows for the year. So using that, it showed me that this was the potential, and so we missed by 10 points. And obviously, in the range of the year, 10 points is insignificant. So looking at this chart, I'm looking at the last year's low has been recaptured, and we've had a bounce to level 2, and now we're level 3, which is we call a 40 back, 4, 5, 6. So currently we have come to test this 92 to 4,000 area, and from there, we need to see, do we continue upward to challenge the 50%, or do we come backwards first? Either way, I believe, as David Hunter does, that probably, at least temporarily, the low is in for now. When we get this push to 40 back, you really have to break this last low down here, which is last year's low. So I think as long as we are holding above last year's low, the low is in for now, and time will tell whether we get that moonshot that he's talking about, which would be a slingshot trade. Have to come out the top to do that, and then the scramble would be to get in there if that's true. So we're going to still take it one day at a time, one week at a time. And using some of the information that I like to do, this is the yearly broken down. And there's a little bit more complex with moving averages and so on. And so the averages that I use, we're bumping into an important area here. We need to get above this rain line and hold it there. And even if we pull back, these lines will tend to be pushing up to it. So you've got to not only push back through this level, but you've got to break all these moving averages too. And this is what I call the funnel, because we're clearly trying to resolve the faster moving averages with a longer term duration. So very important chart for me. And we're looking at a monthly chart here. We can see how we have taken out the previous month's high. We've come up into that 4,000 area. And just by laws of proportion, a lot of traders are much younger than I am, and so decimals are the way to go. But I remember the fractional system, and that's why I think the old timers really understand the significance of charts like this, because they used to deal in 16ths and 32nds and 64ths and whatever. So there's a very easy way to establish, oh, okay, we're about a 25% pop above last month's high. A very simple way to do that. So I like these charts. This is the way I do it. And there's no one right way to trade markets or analyze markets. You just have to develop something that works for you. And we can see the battle is obviously this yellow circle for now. There's a weekly. We can see how we held the prior week's low, came out the top, and again, a little bit over a 25% pop above last week's, and everything turned around right here, CPI. Till then, the jury was out, but now obviously there's a lot more traders that are saying, well, maybe we are going up. So looking at this chart, obviously the middle has got this area where we flipped has got a hold on pullbacks. This next level here, 39's got a hold. And step by step, we'll watch this week and see what happens. Lion's share of the last two days gains were obviously achieved in this trap and squeeze. And these are all examples of dynamic pivots because those numbers will change. These are static pivots. They're always going to be relevant. No matter how high or low we go, these are always going to be fixed increments. And so we need to adjust accordingly as to this frame. We call this the frame. 3750, I kept saying, is a major pivot. 3711, important support. I don't make these things up. I just try to interpret that according to the system and the rules. So as long as this was holding, this was support. We do tend to find that the indexes, the futures, will tend to drive opposite direction from these lower levels rather than just the 3750. And we found that to be true. They will get under these areas. And now this 3906 and a quarter is basically our pivot. And you can, empirical evidence, you can just see how this works that way. So the next level, the next level, and the next level. And this is what I call the three-box system and the two-box system. We need to resolve two boxes first and then the third. So to explain that as clearly as I can, right now, this 3984 and a half is the pivot because we're either going to go here to the 4023 and a half, or we're going to come back to 3945 and a quarter before we do anything else. Let's just take, for example, that we get up here to 4023. So then we can use it as a three-box system and say, okay, this is still support. But now that's really the fighting range we got up here, with this one still remaining, our support pivot. And so we take them one level at a time. That's the best way I can do to explain, best thing I can do to explain these static pivots. So for now, everything inside this is range trading. And technically, because this box was rejected, this is the first battle zone that needs to be decided right here. And that's how I analyze the markets using this very simple methodology. And you need to understand that this is all tied in with, obviously, those other charts we showed. Those are overlays on top of this. So we already know where our next potential resistance and support areas are, not just based on what's happened with that overlay, but what's happened with market structure. And once you understand this system, you'll understand whether it's a stock trading at $12 or $112, doesn't matter, because you will find the ranges that are appropriate on any given day. And that's what I'd like to share today with the methodology that I use and how I interpret that. macro look, and all those other ideas inside that. So just based on this range, we already know this is the most important range now that needs to be held for the longs. And this becomes our middle pivot, and this is our resistance pivot based on that system. And there really is a simple way to do this, whether you're right or wrong. I believe this is one of the most simple methods that we can use to determine where we are at any given moment in time. And the rest is horse trading, as they say. This is Eve from MarketWizards.com. Hope you enjoyed today's lesson and hope it helps you. Be well and enjoy the rest of your day with your family.